We are back, baby. Welcome everybody to another episode of the Tradingview coding series. My name is Dillon. I hope you have all been well, and I think some of you would have probably seen this one coming, because today what we are going to be doing is we are going to be developing the code, which I did show off in my recent video, which was a new series of mine that talks about the best trading strategies that are out there on YouTube, and I take a quantified approach to trading. So I'll be testing a lot of these trading strategies in a quantified manner, and I'll be posting that on that new series. Now, what I want to do for each one of those videos that I do show is in the subsequent and the follow-up video of that, I want to be going through the code, and I want to be sharing with you how I've coded up those particular trading strategies, so that way you can have the code, you can test everything, you can validate everything that I'm saying, whether they work, whether they don't work, but you've got the code there. And I think you can really make one of these trading strategies your own. You can add your own nuances, your own indicators, and develop it in a way that fits your trading strategy and that works for you. So, of course, being the first episode, we talked about the no-nonsense Forex basic strategy. In this episode, we are going to be going through that very code, and we'll be developing it together. So that way, as I mentioned, you can have the code and you can do what you will from it. So I don't think there's any more that I have to say, other than I'm super excited to be doing this Tradingview series again, and to be going through these codes, and not only a no-nonsense Forex basic strategy, but also other strategies, not only in Forex, but in all other markets, to actually be going through all those different codes, so that way you might actually get a feel of different trading strategies, how they work and how they might not work, and get some of the ideas from them and use it in your very own trading strategies. So without further to say, let's go into Tradingview. So, of course, if you know me, you know I like using Tradingview. It's very easy to pick up, and it's something that I have not only picked up but continue to use along the way as a quant trader and a coder as well. I wouldn't call myself a mastermind in all these things. I am still very, I suppose, new at everything. I wouldn't say new, but I know a little bit. So, but I'm definitely no professor or connoisseur in the coding profession. But saying that, if you want to take this quantified trading approach, this video might be able to help you and assist you, and we'll be able to provide you with some insights along your journey if this is something that might appeal to you. So, a few things that I want to mention straight off the bat, and I got this a lot in my coding series, and I'm probably going to get it again. A question that I get a lot is, Dillon, where can I find the code for this? Now, I will be providing a template code, and that template code is something that we're going to be using throughout this series in subsequent episodes and things like that in the future. So that's going to come in handy. Now, if you want that code, which, if you're following along, you probably need it, then it will be linked in the Discord channel, which is in the description of this video. Go to my Discord, you'll find it there in the resources for Dillon's resources from Dillon tab. You'll find it there. That's where I put all my resources for any of my videos that I do. You'll find it there, and then download that one, and then just copy and paste that text file into your Tradingview code. The reason why I'm providing that and not the final code is I want people to actually code this. I want you to actually code this and get a feel of whether you want to actually be coding or whether you don't, because I don't want people just to copy and paste the code and then not do anything with it, and maybe not understand it, or maybe change some things and it doesn't work. Whatever the case is, I don't want people to just blindly copy and paste these codes and not actually really understanding them. Where if you actually, follow along and you actually start understanding how to code in PineScript and all of that, I think you'll be able to pick it up fairly easily. But not only that, you will actually learn how to code, and you'll actually be able to develop your trading strategy the way you want to, instead of just taking my word for it, or instead of, just blindly copying what I do, for example. So I think that's very important, and of course, moving forward, as I mentioned, I'm not going to be providing the codes. What I am going to be doing is walking you through the code and developing it with you, so that way you can get a feel of coding and you can understand exactly what we are trying to do here. So with that in mind, let's have a look at what we need to do and have a look at, of course, that template file. So of course, I've opened up TradingView, and another thing that I want to mention is I've done a lot of videos. I know it's talking about the no-nonsense Forex trading strategy, but I've done a lot of videos talking about TradingView Pine script in the past. Of course, if you've been following me, you would already know that. So saying that, if you've been following me, you've been following along with this TradingView series, you would probably get a gauge and have a feel on what coding is and how to actually, develop these trading strategies through Pine script, and you would be fairly fluent, I would assume, in coding. Now, that means that when going through these videos, I'm actually going to be going through them not super quickly, but I'm going to assume that you are fluent with coding, and I'm not going to dwell too much and take too much time talking about a specific topic really that relates to coding. So really, if you need a hand with coding, there's a lot of resources out there. There is, and I'll leave some of them down linked below. If you're a beginner and you want to start off very fresh, then I'll leave some links below. If you have been following along and just need a recap on a couple of things, then I would recommend going, of course, through my YouTube coding series and trying to develop that no-nonsense Forex Forex trading strategy yourself, because you'll be able to pick up coding. I think if you follow that whole thing, by the end of it, you'll be, decent at coding, I'd imagine. So saying that, I'm going to be going through this at a decent pace, not too fast, not too slow, but if you do get stuck, you can always rewind and maybe do a little bit of your own research again anyway. So with that being said, let's go into the code. So this is the template. So when you download the template from my Discord, this is what you're going to see. You can just copy and paste this template into a new strategy. Of course, you just click on this new blank strategy, copy and paste that in here, and this is what you'll see. So of course, we are using a strategy. So this is where the strategy function comes in over here. And of course, that's the first thing that we need to do. And I'm just going to change this strategy name to NNFX basic strategy. I'm just going to put my initials there, DG. So that's just the name of this basic strategy. And yeah, I'm going to hit save. So that way we're keeping track of what the strategy name is, and it's all good. So I've saved that. Anyway, I'll be coming back to most of this. Your default currency might be the one thing that you might want to change. If you want to change your default currency or your base currency, then of course, by all means, you can change it to whatever your base currency is. Even though I'm from Australia, I like to just use US dollars. It's just, I guess, the go-to currency, I suppose. And when it comes to backtesting, as long as everything is, I guess, identical, it shouldn't matter too much. It matters a little bit, but not a whole lot. But feel free to change your base currency there. Initial capital, I've got $50,000. Now you can change it to whatever you want. That's fine. But the one thing that we'll be coming back to is this pyramiding. At the moment, it's set to 1, and I'll come back to that in the future. So then the first chunk of the code over here is our Forex exchange, and this basically is our currency conversion from when we're trading a currency pair that's not linked to our base currency. So for example, the AUD USD pair, that's linked to our base currency, which is US dollars. But if I was trading something like Euro Swiss franc, that is not linked to our base currency, the US dollar. So if you know Forex, you have to do a currency conversion. This essentially does that currency conversion for you. So you don't need to touch any of this. This is all automatic. This is really good. And this is here for you. So saying that, you don't have to touch it. It's already in the template. Leave it there. The next one is this backtesting date range. So this selects the date range that you want to backtest from. So for example, and by default, I have got here our starting date to be the 1st of the 1st, 2004. And it tests up to the 1st of the 1st, 2021. Now that's just how I like to backtest my trading strategies as a whole. Of course, if you're doing an in sample, out of sample, or walk forward analysis, you can change these, but these are of course input variables here. So you can change this through in the actual strategy tester itself. Being an input variable, you don't need to change the code every time you want to change the variable. So that's fine. One thing that I've added here now, I don't know if this is new or whether it's, I don't think it's something that I have provided, but this is something that I've been using lately. And this is this, basically all this does is anything that has a Swiss franc currency, whether it's base currency or, you know, the other currency, anything that uses the Swiss franc as a currency symbol, I have taken out the time between the 1st of January 2015 to the 18th of January 2015. Now this time was the Euro Swissy crash, and as we know, that was a massive crash that can actually really skew our results in our data. So because that was a black swan event and something that, you know, may happen in the future, but we don't actually know when or where or and anything like that, it's very black swan. I have put this in here to omit it from our back testing. So basically when we do our back testing, it's not going to take any trades between the 1st of January and the 18th of January 2015. So it won't take any trades there. So I've just added that in there. Again, this is in the source code. We don't need to touch any of this unless by default you do want to change your backtesting date range. By all means, you can do whatever you want with it. But saying that, for most of you, you probably won't have to touch this. The next one is money management. So this money management by default is the no nonsense Forex money management, and that is a volatility adjusted money management technique, which takes our profit at 1 times ATR and our stop loss at 1.5 times ATR. So this is all done and calculated for you, and the position size is calculated in this last one, and this is again of course based off the ATR, based off our stop loss. So we're taking 2% risk on every single trade, and this is our position size is then calculated based on 1.5 times ATR. Again, if you're doing no nonsense Forex, you don't have to touch this. In other videos, of course, we might do other money management techniques. So of course, we might need to change this if it's not based on the ATR. But saying that, for this particular episode, this is all done for you. You won't have to touch anything. So the next couple of, I guess, segments or blocks are these indicator 1, indicator 2, indicator 3 placeholders. So this goes all the way up to 6. So you can put in 6 different indicators in here if you like. I mean, by all means, you can add more. But saying that, I think, you know, for these cases and the videos that I'm going to be showing you, I think I'd be very doubtful if we have to go all the way up to 6. But saying that, we are going to be putting in our different indicator codes in here. And for our first one, just as a, I guess just for you to note that this first one here is where our indicator trigger goes. So whatever our trigger is, and that is, for example, if you've been following No Nonsense Forex, that's our C1 indicator crosses. So our C1 indicator crosses will go here. And that is our trigger. So when there's a crossover or a cross under of a particular indicator, that's what we put here. The next indicators are just your confirmation indicators. So other trend filters, filter indicators will go here. Signal filters. So they'll all go here. So we can add as many indicators as we want. I mean, you can add up to 6 by default, but you can add more, you know, if you like to as well. So the next part of this template is this entry condition. So this is where we actually enter the trade. We've already got our entry conditions in here. So you'll see a couple of conditions here, and this is where our indicator conditions will go. It's got 1 through to 6. And we got a few other conditions here. That's that Euro Swissy date range. This is our normal date range, and this is just extra conditions for when we are either long or short. This one here stores the value of our price, and it stores the value of our ATR, and that is stored with these variables here. So when we enter a trade, we want to make sure that we are storing the values storing the variables, all the values. I mean, it doesn't really matter, they're both the same thing, but we're storing the ATR and the price when we enter a trade, because then that is used to calculate our, other things that we might need, for example, our trailing stop loss. So that is what this is used for. The next one, or the next part of this section, is our entry long and our entry short signal. So by default, there is one long entry and another short entry. So there's long entry 1 and short entry 1. So either we're going long, we're putting on one trade, and we're going either short, we're putting on another trade. Now, if you know No Nonsense Forex, which I assume you probably all do, you will know that No Nonsense Forex utilizes a scaling method where you put on 2 trades when you enter in a trade. So instead of putting in 1 trade, you're putting in 2. And what you're doing is putting one trade on both, or putting both trades on at half the position size that you normally would. And with the idea that you take, you have a take profit for one of them and a trailing stop loss for the other one. So you don't have a take profit for the other one, you just trail your stop loss up. So that's the idea that we're going to be, of course, doing, and that's what I showed you in the code, or not in the code, but in the strategy in the last video. So we're going to be going through that, and we're going to be adding in 2 trades here. So by default, it's just 1, but I'll show you how to add in the second one anyway. The next one, and this is, I believe, the second last one, is where we calculate our take profit and stop loss positions. So this section over here calculates where our take profit should be and where our stop loss should be, and it also will then incorporate, it's not incorporated by default. Default is just a static take profit and stop loss, but we can in future, and what I'll be showing you today is incorporating the No Nonsense Forex stop or trailing stop loss method in here. So we'll have to code that one in, but that's fine. That's the only thing we're going to really have to change here. Other than that, everything else is already populated over here. So the last one here, I'm gonna just enter down so you can see it. So the last one here is our exit conditions, and this is where we submit our orders for our exit conditions. So we've got strategy exit and strategy close. This is where, we've entered a trade, but then we also need to close the trade or exit the trade, accordingly. So this is where it's all done for us, and this is where we submit the orders. However, all the calculations are done above over here. We've got here, of course, again, we're only got 1 trade on at a time at the moment by default. We're going to be having to enter in our second trades down here and putting in the codes down here. So with that being said, I think that's a bit of an overview of the code itself, and I think we can get straight into it. So the first thing I want to do with this code is actually import one of our indicators to actually see whether it works. And of course, the first one, it makes sense that we import our SSL. So what I'm going to do, I'm just going to minimize that for now. I'm going to go into our, that's not the right one, our indicators and strategies, search up SSL. And the one that I've been using is this SSL channel by Erwin Beckers. So Erwin has got a really nice SSL channel, and I do like it, and that's the one I've been using for quite some time, and this is it. So to get the code for this, now I don't know if this is this is okay. I'm gonna do it. Let me just, okay, no, doesn't matter. I don't think I did too much anyway. But what I'm gonna do is copy this code. So this is the code from the SSL channel. I'm going to copy it, I'm going to go to my strategy over here. I'm going to go to my triggers and enter it here. So this is the code. I'm going to zoom in one more. So this is the code for the SSL, which is done by Erwin. And well, first thing I want to do is actually reference the person and put in the indicator name. So I'm going to go SSL channel by Erwin Beckers. Just want to pay credit where credit is due. So first thing straight off the bat, and you've probably noticed this if you've been following along and testing out your own indicators, is we've got a version 3 here, and that's just the version that this particular code was, done on, but it is outdated because we'll notice that our particular code, and for yours as well, will be version 4. So that's the most recent version. So there's not too much that has changed. After you've done this a couple of times, you would realize what's been changed and what hasn't been changed and things like that, but there's just a few formatting things that we do need to change when it comes to converting our version 3 SSL channel to a version 4, but we're going to be going through that anyway. So if you've done this before, you'll know that I don't need this version 3 or this study in here. I've got period, but what I'm going to do is go SSL period, SSL length, and look at the code. I've got SMA high length. I need to change that to SSL because I've changed the name. Same thing with the bottom one. Ooh. Same thing with that one. I'm going to space this out a bit. Yeah, that looks nice. Okay, so HVAL. That's good, but I don't think I need to change HVAL. I don't need to change any of the names here. They're not very common names. What I've noticed here as well is that SSL length is used, but SSL period is not used. I'm going to take out SSL period. And one last thing, our default value that we've been using is, well, our value that we used on the code is 12. I'm going to change that default value from 10 to 12. Now, with remember I said that with this code was in version 3. In version 4, for anything that uses colors, we need to now label it as color dot whatever color it is, and that's what I just did there. So I've just labeled it as color dot whatever. Let me just make this nice. I want to change the line weight. And what I might do is change the color. Orange, blue. Because that lime and that red's going to conflict a bit. So let's see if this works. I think there might be one other thing I need to change, and that might be the float variable. Yes, it is. I'm getting an error. You can't see it down there, but it's saying error line 100. So we'll go to line 100, and that's this. So another thing that I've noticed when converting from version 3 to version 4 is any float variables you'll need to actually declare that they are a float. And how you know they're a float is it's declared over here as typically an NA or a 0. It would have a variable equals NA or 0, and then we'll have that same variable, and it's got the parentheses and the equals here. That is how you, I guess, or that's how I do it. That's how I know that this is a float variable. So it's got the variable declared again, and that's just the calculation for it. So saying that, if it is a version 3, you will need to declare it as a float over here. So let's add that to chart, and let's see if we can plot our SSL. There we go. So there's our SSL. And I think that is looking pretty good to me. Awesome. So save that. Good thing to do and a good habit is every time you test something, you save it. Now, what's really good and what I think you're going to get a lot of value out of this is because I'm actually going through the whole code, you're actually going to see I guess how I go about coding and how I go about, problem solving. If I do get errors, for example, how I go about actually, trying to solve that. For example, let me see if I can get it. Oop, there we go. We've got our error down here. Add to chart operation failed. Reason line 100. So you go to line 100 and you check, what that error might be. And once you've done this a few times, you'll pick up on the errors and the mistakes that you make, or whatever, and you'll be able to fix them up, hopefully pretty quickly. So. Saying that, I think you'll get a lot of value on how I go about developing codes and developing strategies, and the order that I do it as well. So I think it's going to be a lot of value. So now that we've got our indicator in, we of course need to add in our entry conditions. So I'm just in the strategy tester section, and of course there's no data there, and that's because we haven't told our strategy that we need to enter long when there's a crossover and enter short when there's a cross under. That's exactly what this is. So we've got indicator 1L. So of course that's going to be our long condition for our first indicator. And I'm just going to type in crossover of SSL up and SSL down. So when there's a crossover of the blue, and I'm just reading that from here, when the blue crosses over the orange, that's when we want to go long, and I'll just confirm that. So when the blue crosses over the orange, which is this example, we want to go long. Same thing with this example, blue crosses over the orange, so the blue goes above the orange, that's a crossover, that's when we go long, and it looks like that's what we want to do. Now the opposite will be for short, so cross under up. Now I'm using the cross under function. So when there's a cross under of the blue and the orange, so the blue crosses under the orange, that's a short. That's probably a bad example of a short, but there we go. When there's a cross under of the blue goes under the orange. That's a cross under, that's when we go short. And this is an example of a short. There we go. So that's all in. Let's add it to chart. There we go. We're getting results, which is very, very good. So these results now means that our strategy is actually getting data, and it's also incorporating a static take profit and stop loss. So I mentioned that all of this is already done for you in the template, or I guess started for you in the template. And we can see that it's got some money management in there, and it's taking that one trade and giving it a take profit and a stop loss over here. So we can see that this trade happened to go long. There was a crossover, so the blue went above the orange. And we can see it's taking its profit over here, and it's got the exit here, and that is a take profit stop loss 1. So that just means that our take profit and stop loss 1 has been entered. So it took its profit. We got a short, but this is a bit of a chop, really hard to see with that one. Here's another short, and this one happened to take the loss because it hit our stop loss, which is up here. We had to take profit, so you can get the idea. So once you do this, it's already got code, and it's already done over here, which is really, really good. And we can see we are now getting data. Don't worry about that. No data there. We're clearly getting data, but yeah, don't worry about that. So that's good. So the next thing I think that might be beneficial is to actually put in our second trade. So we know with No Nonsense Forex, we want to be putting in our 2 trades when we enter. So what I want to do is just quickly remember this number, 3,400. So what I want to do is instead of putting one trade on, I want to put on 2 trades with the same money management. I just want to put on 2 trades with half the amount or half the size there, just to get everything started. So remember I spoke about at the very start this pyramiding. So pyramiding equals 2. Basically what the pyramiding means is how many trades can we have on at once. So by default, pyramiding is equal to 1. But what we want to do is actually have 2 trades on when we enter. So that means that pyramiding equals 2. So pyramiding is just the maximum amount of trades we can have on at a time. So with the no nonsense forex strategy, we want to have a maximum of 2 on at a time, and that's when we enter in a trade. So I've changed that to 2. Now I need to actually put in the conditions for our trading strategy. So when it enters long or when it enters short, I want to actually make sure that we're entering 2 trades. So I'm just going to copy this, and this again is where we submit our entry orders. Just going to copy this, add it in there, and just put in long entry 2. And I just want to times the position size by 0.5. Now same thing for our short entry. I want to have a secondary short entry. I'm going to times it by 0.5. So now we've got long entry 1 and long entry 2, short entry 1, short entry 2. Now this is the entries. Remember, we need to do the same thing for our exits. So down the bottom here, we've got our strategy exit 1 and 2. Oh well, our strategy exit 1, we need to add in our strategy exit 2. I'm just going to change this to 2 and do it again for here. 2, 2, 2, 2. So basically all this is saying is exit 1, 1, and 2. There we go. So basically this first section here, when we're using strategy exit, this takes our exit, or this closes our position based on take profit and stop loss levels for both now our long entry 1 and short entry 1, long entry 2, short entry 2. This one here, this strategy close, which is this last one, what this one does is it takes the it exits the trade and closes the trade at our C1 indicator cross. So if we get a C1 cross in the opposite direction, that closes the trade, and that works as an exit indicator. So our C1 for this particular example is our exit indicator. Of course, if you got your own exit indicator, you can add those conditions in down here. But saying that, this is fine. And I think that is it for now. So remember, we've got 3,487. If I add this to chart with no errors, we should hopefully get the same value. 3,487. Awesome. So that means it works. And let's go to the charts, and we can see here that we are entering in long, and we've got the comment here, long entry 1, long entry 2. We're entering long here. And we're exiting with a take profit or stop loss 1, take profit, stop loss 2. So both trades are entering and exiting at the same time. Now, what I want to add in, let me save that. Now what I want to do is not incorporate our take profit for our second trade. So our first trade takes the profit, and this is the no nonsense forex money management system and part of scaling out. We want to not have a take profit at our second trade. So we want to let our second trade ride. So having no take profit means this limit over here at our exit conditions, we don't have a limit. So the limit means take profit. We don't have a limit at or don't have a take profit for our second trade. So now this value is going to change because we are going to be not taking profit at our second trade. Oh my jeez. Well, there you go. That is why money management is important. So we can see here that we are, for this same example, instead of having our take profit stop loss 1 over here, we now just have 1 and 2. We now just have 1. So we've entered long here. We've taken our first take profit, and we've exited here, and we've got an exit 1 over here, which is good. One thing that I just want to quickly tidy up is to get rid of this line if our first take profit happens, because it's a little bit confusing. So a good way to do that, I'm going to quickly do, is over here. So a long profit level. So I'm just going to add in another condition here in our long profit level, and I'm going to say strategy dot open trades. So if strategy dot open trades equals 2, which means we have 2 open trades on, we are using our entry price profit, else NA. So if there's 2 trades on, we are putting in our strategy if there's 2 trades on, we have got a take profit and stop loss. However, if there is 1 trade on, which is here, so if there's 2 trades on, then we've got our take profit, and if there isn't 2 trades on, which means there will be 1 trade on, then we don't have a stop loss over here. So that's a good little trick. You'll see what I mean in a second, and I've just done the same thing for our shorts profit level as well. So let me close that. Now this shouldn't change the value, it's just going to change where that green line is, and there we go. So basically this green line stops now when we've hit our first take profit, because of course the second trade doesn't have a take profit. So I've just added, taken it off here. So it just makes the chart look a lot cleaner. Find another example. There we go. So we've got another long signal here. It's taken the profit, and then it's just nice here. So that's fine. Awesome. Now the next thing with money management, let me save this. That seems to be working. I think it was 15,000, 18,000. We're doing all right. So the next thing I want to do is put in our trailing stop loss condition. So I'm not going to go through the trailing stop loss condition really. What I will do is I'm going to copy and paste it from our last video. I'm going to copy this here. I'm going to copy this here, and I'm just going to run through it. I'm not going to go through it in a lot of detail. If you want to, one sec, long entry 2, and I'm going to copy, I'm going to make a slight change. I'm going to copy this so it lines up. I'm going to copy this here so it lines up. Awesome. So I've just added in as well for our long entries. I've just added in this or entry long or entry short down here. I've just added in this extra condition over here. And I'm not going to go through too much detail of this. I will, I guess, show it to you. But if you really want an in-depth explanation of what this actually does, then I would recommend going and watching my trailing stop loss video on this, because for time constraints, unfortunately, I'm not going to be able to go through everything that has to do with this particular code and code it up. I've just copied and pasted it. But saying that, if you want a detailed explanation of what all of this does, then by all means go to my my trailing stop loss video, which I do go through in detail on this. Of course, I will probably put a pop-up box here, remind me. So at a very, very high level, basically all this is saying is when we got 2 trades on, or when we get a long signal, our stop loss, of course, is 1.5 times ATR. And that's what this N loss is, and this N loss is up here, which is 1.5 times ATR. So 1.5 times ATR minus, close price minus 1.5 times ATR for our longs. So when we first enter a trade, that's going to be our stop loss. 1.5 times ATR away. However, when we have one trade open, for example, this is what our trailing stop loss, this is the actual code for our trailing stop loss, and this is what it is. And basically how it's calculated is it takes the max value between when we entered, or takes the maximum value of our stop loss level, or it takes the maximum value of our trailing stop loss level. So it actually trails up, or the entry price. And so there's 3 different conditions in here. Again, I'm not going to go into too much detail. So again, for shorts, very similar. Over here, this is our shorts. I'm just going to scroll across just to make sure that you've got the code here. Again, I'm not going to go through it in detail. This is just the code, so you can copy this code. If you want to go through detail, of course, go check out my trailing stop loss video. So, saying that, let me close this one. Enter chart. There we go. We're now up to 19,000. Oh, this is a good strategy. The more we add, the more money we make. That's what we want, baby. So here we can see, so this is that same example that we were using before. We can see that when this trade has 2 trades open, so it hasn't taken its first take profit, our stop loss stays at the same range. But now we can see that our take profit got hit, so that's when our trailing stop loss gets activated, and we can see our trailing stop loss now goes from all the way down here now up to here, and it unfortunately did get tagged over here, but that's fine. We can see a nice big trade here. We entered long, take profit got hit, that's when our trailing stop loss then moves up, and it slowly moves up until it gets hit up here, which is really, really good. Another one, let's try and see a short example. There we can see enter short, hit straight away, trailing stop loss, we get done here. So we can see that everything's working, which is really, really good. And we can also see that our strategy is also improving, which is nice. So that's our money management done. Now let's add our next set of indicators. So we've got our SSL. We now need to add in our DPO and our Rune. Why did I say Rune? WAE. I'm going to add in DPO. I'm going to get the code for... Now, we use DPO 23 by memory. Of course, you can tweak this and do whatever you like with it. But what I'm going to do is get the code for the DPO. Now, the good thing about the DPO is it's done by Tradingview, which is nice. I'm going to go back to my code. So I've just copied the code of the DPO. There we go. What's good thing? Good thing that this one is version 4, so we don't need to change too much. Close all of that. So we've got by Tradingview. We've got period. I'm going to just change that to DPO period. Our input is going to be 23. That's just the value that we've been using. I don't need this, but I'm going to keep it in there anyway, just for simplicity. Copy, change the period, MA. I'm going to change this to DPO, MA. DPO, MA is centered. I don't need this in centered, but there we go. So DPO is centered. I don't need this plot function as well. Because this is not an on-chart indicator, I'm not plotting this on the chart, so I'm not actually plotting anything in here. But this is the DPO calculation. Now, one thing that I'll come back to it. I'll tidy it up later. It's okay. I'll tidy it up later. So now I'm just testing to see if we get any errors. I don't think we will. We've still got 19,000. We got no errors, everything plotted, which means our DPO is in there and it's fine. I'm going to hit save. Now our conditions for our DPO. Now our DPO is a 0 line cross. So basically what we want to be doing is going long when our DPO says go long, or sorry, we're going long when our DPO is above 0. We're going short when our DPO is below 0. And we can see we've got a trend here. You can see we've got a little bit of a trend there as well. So DPO, so we want to go long when our DPO is greater than 0. We want to go short when our DPO is less than 0, which is good. So now we've got our conditions in. We should see this value change now because now we're adding in these conditions. There we go. That's it's made us less profitable. Actually, yeah, it has. But that might be okay because we're adding in our WAE, and that might be okay. So it's made us less profitable, unfortunately, but it also has reduced the amount of trades, and it might have increased our win rate as well. I don't recall what our win rate was here, but you can go back and go check that one out. It might have improved our win rate, but it has reduced the amount of big trend trades that we've gotten, unfortunately. Saying that, it works. The code works, and that's the main thing. So you can hit save. Now, the last one is the WAE indicator, the Wada Atar explosion, and this is the one that I've been using over here by SHK, Wada Atar explosion version 2. I'm going to add that to chart. Now, a couple of things that I'm going to be changing over here is we used 70. All of these values I'm going to keep as default, and I'm just going to change this to white just so we can see it a bit better and take out this dead zone because we're not using the dead zone. So this is WAE. So this is our volume indicator, and basically all this indicator is doing or telling us is if there's volume, that's when we trade. So the volume indicator, these red bars are above the volume, that means we're trading. Also when these red bars are above this signal line, that means we've got a trade on. When these green bars are above the signal line, that means we've got a trade on as well. Anytime that the bars are below the signal line, that's when there is no trade because there's not enough volume. So we can see here, it's kind of a choppy area. Boom, volume. Kind of a choppy area, chop, 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 boom, volume, things like that. And so we can see here, relatively flat, steady growth, but there might be a couple of times when it does, pop its head above the signal line. But saying that, that's the idea of this indicator, so that's what we're going to be using. Again, I'm just going to get the source code, and I've just clicked on this source code. Lazy Bear. Lazy Bear's done a lot of codes in Tradingview. Just going back to my source code, indicator 3. Lazy Bear, thank you, Lazy Bear. So again, I'm going to keep this all in here. Just going to add in. There we go. So modified by Dillon Greg. And all right, so I think this was version 4. I didn't copy it over, but I think this was version 4. So I don't think when you're going to need to change anything, we can double check it, and I'm sure we'll get errors anyway. So again, I'm deleted the study sensitivity. That's default value is going to be 70 because that's just what we've used. This fast length, that can stay there. We're not touching any of this. But I will eventually remove the inputs out of here because we don't really need the inputs because we're not going to be changing those ones. But I'll leave them in there for now. I'm going to delete. Oh, actually, before I delete it, what I want to do is understand what this is actually plotting. Now, there's a few things here which might make things a little bit confusing. So what we're going to be doing is to understand what this plot function is, or what the code is doing or telling us, is I want to make this bigger. Let's see if I can fit both in. I think I might. Just can fit it in. Awesome. So we've got plot, trend up, style columns. So this is one of the columns that we can see here, and we've got lime to green. Oh, this is number 3, but I think we're going to be taking that out. We'll see if we get errors anyway. But this is lime to green. So we can see that trend up is this limey green color. So trend up, I think, will correlate to when we have a bull trend. Makes sense, yeah. So green is a bull trend. So if it's a bull trend, then we want our trend up to be greater than our explosion line, which is this E1 value. I'm just going to double check that. I'm going to go to the source code. I click the cogwheel style explosion line over here. And that's that white line over here on our chart. So we want our trend up, which is our green bars, to be greater than our E1. And that's the condition. Now, I would assume that for our short conditions, we want our trend down column, so that's those columns, and we've got orange red. Awesome. So orange red here. And remember, for this, because it's a volume indicator, we want our volume to be greater than the signal line, or the explosion line, which is what they've called it. So we want our explosion or our red bars to be greater than the line there, which is what we've coded in here. Cool. So with that there, I'm going to delete these plot functions, because again, this is not an on-chart indicator. This goes separate to the chart. It's not like the SSL, so we don't want to be using plot functions in here. And what have we got? At the moment, we've got 11,000. That one's loading, that one's thinking, but I think it should be okay. 11,000. Yeah, it's definitely in there. Oh. Yeah, E1. Maybe it didn't. Maybe it's a different 11,000. I don't actually recall what it was, but let's play around with the sensitivity just to be sure. Not that much. Okay, there we go. So it is changing. That's fine. That's what we want. Okay, very good. It just happened to be roughly the same for this particular example. 70,000. Okay, that's fine. That's cool. It scared me, that. So anyway, it works. You would have seen that I was changing the sensitivity around, so the values were changing. That's fine. That means it works. Of course, normally when you're doing this, you want to be optimizing as you go. You know, it's not that quick because I've already done the optimization. I'm just showing you how to do the code. But you know, when you're developing your own trading strategies, of course, you want to be as you're going along, optimizing your indicators as you go. So, of course, it's kind of like cheating because I already know the answers, which happen to be the best optimized values. And that's why I'm setting these to different to its default parameters, to the parameters that we know has worked the best. So the last thing for our trading strategy that I did add in was our one candle rule. So for those people that may not know what the one candle rule is, I would recommend going and watching No Nonsense Forex. But basically what we're doing now is, for example, it's probably going to be really hard to actually find a trade, but for example, we can see that there's no trade on here. If there's a crossover of this particular indicator, and one of our other trading signals did not agree. So for example, down here I can see that there's no volume, so this wouldn't satisfy all the conditions. We give it one candle. So in the next candle, if now that for the next candle, the one after the original crossover, if that now says for all indicators, it's good to trade, that's when we would enter the trade. For this particular case, the volume is still low, but hypothetically, if the volume was high, we would then enter the trade and we give it one candle. So that's the one candle rule. So if you want a bit more of an explanation, then I'd recommend watching No Nonsense Forex and watching BP. If you want a bit more explanation on, and not the 1 minute rushed explanation on how to code it, then I'd recommend going and watching one of my old, my past No Nonsense Forex coding series in TradingView, where I do discuss the one candle rule in a bit more detail. Anyway, saying that, the way I'm going to do it is I'm going to do it over here. Now, this is slightly different to what I did. It's not and, it's or. In my old video, but the result is the same. And it's the same idea. So, if there's a crossover of the Arun, or if there was the Arun, the SSL, or if there was a crossover on the previous candle, that is when we are going to be using the one candle rule. So basically this extra condition here is giving it one candle to rethink about everything and to enter the trade again. So it's giving itself one extra candle. Same for shorts. It's instead of crossover, it's cross under. Same thing. I've just copied and pasted this over here. Put in an or condition. So if one of these are true, that means that our indicator 1 says go. So we've got 11,000. Let's add in this. Now this should increase the amount of trades that we're getting, hopefully increase the profit. And there we go. So we've increased the amount of trades and we have increased the profit as well. So that was sitting at 11,000. We're now up to 17,000. Let me hit save. And I think that might be it. I think that's it for the code. There's just one thing that I want to do, and that's just a quick tidy up. So as mentioned, you've got this. I've clicked the cogwheel, and we can change our date ranges. So if you're doing an optimization, of course, you want it to be testing in sample, out sample, even possibly a walk forward. So you can adjust the date range here. You can also adjust the RIC per trade. I'll change that. You can adjust the RIC per trade from 2% to whatever percent you want. You can also adjust your take profit and stop loss levels. Now, this is the period and the length. That period was SSL. I'm going to change that. This centered one, that's from the DPO. I'm not going to use that. So I'm going to take that off. And sensitivity, that's the WAE sensitivity, but all of this here, because I'm not optimizing that, I'm going to take it off. So I'm not going to have it as an input. So this is just a final cleanup of the code. I'm just going to call that SSL period for reference, DPO for reference, and I'm going to take this input off. So it's now not an input, so it's just always going to be false. And these inputs are going to go. Sweet. So that should not change anything. There we go. So it's still 17,000, but what's really good is it's now much cleaner in here. We can see all we're optimizing is our SSL period, DPO length, and our sensitivity for our WAE. And what's even better is if I go WAE sensitivity. That's nice. Awesome. That's good. That's really good. So it works. Now I think that's everything in terms of the code. what I'll do, I'll give a quick recap of what we've done, and then I'll actually check it with some of the results that we did get from our back testing from the coding series, not the coding series, sorry, the testing series, the new testing series that I've done. Anyway, just as a recap, we have changed the pyramiding from 1 to 2, so that allows us to put on 2 trades. We then put in, down here we've got our first indicator, and we've put in not only our initial crossover but our 1 candle rule as well, and this is using the SSL channel. We've got our secondary indicator, which is the DPO, and we've put in our conditions here, of course. And now we've got the WAE that of course was provided by Shanya KM. And that is down here, and we put in our conditions here as well. We also, if you recall, cleaned up a lot of these inputs here and just kept them at the default levels, and we're not optimizing them, so that's why they've taken off as input. We don't have a 4th, 5th or 6th indicator, so they're just there. Over here we've entered in our long entry condition 2 and short entry condition 2, and we've changed the position size to half as well. So that is the no nonsense forex way. So we're putting on 2 trades when we enter in, and that helps with scaling out purposes. So we've added in our long profit and long stop levels here, and the same for shorts. Now again, I'm not gonna, as mentioned, if you want to understand this code in a little bit more detail, then I would recommend going and watching my trailing stop loss video. But this is it here. That's the back of it. And then finally, this is our exit conditions, and this is our strategy exit. We've got 1, and now we've got strategy exit for 2. Remember that we don't have a take profit for our second trade, so that's NA. And we've got our closing conditions for both exit long entry 1 and long entry 2, and short entry 1 and short entry 2. So we've got our second trade or second conditions here, and this is for when we've got a crossover or cross under of our first confirmation indicator. So this will exit the trade if we get a conflicting signal the other way. So that's that. Let's have a look and let's see whether our, what are we using? Some forex. Let me get it up. Which one are we using? I've got too many spreadsheets here in recent, but I know it's here. I think it was this one. Go away. Awesome. Yeah, so this is the one. So this is the spreadsheet over here that we did, of course, use. And that's the risk adjusted one. This is the one I want to go through. So I'm just going to go through, so this is the summary page. I'm just going to go through some of the currency pairs, and just to make sure that it's giving the same results here. Let me zoom out a little bit. Oh, I can't do that. Okay, so what we want to see is, okay, this number here. So we've got 17,370, 17,36. It's just rounded. Let me actually go to the real value. That's fine. 17,369, 17,369.72. Good. That's fine. 8879.27. That's fine. 6334.62. Yep, that's fine. That just got rounded. So I'm just checking to make sure that we've got the same code as what I've shown you in the video, of course. 315. Yeah, that's fine. Just going to test a couple. 28316. Wow, this is a nice chart. Awesome. That's fine. Cool. So it all works. So this is the code. So that means that the code is validated, and hopefully you should get the same values as well. One thing to mention is your values will differ depending on the broker that you are using. So what I will do is provide a list of the brokers that I'm doing for each currency pair, because if you do have a slightly different broker, your results may vary. If you are want to use the same broker that I'm using which is provided through TradingView, then of course I'd recommend using that, because that way you can actually validate whether your code is doing the exact same thing as what my one is doing, and you are getting the same results as what I'm getting when I am doing of course these videos, these coding videos, but also testing these strategies out in my new trading series. So woo, I'm exhausted from speaking for an hour, but saying that, I think it's definitely worth it. I think it's worth that we actually go through this, and we actually, go through the code, so that way, if you want to test and validate everything that I'm showing you, then of course, here's the code, go through it. Of course, you have to code it up yourself, but that's the whole purpose of this, because I don't want anybody to be, going out there copying what I'm doing, or copying the code without actually understanding how to do it. The whole goal of this whole, this particular YouTube series is to help those that might want to take a quantitative approach to trading, and specifically one through coding, help develop, your skills as a coder, and to show you this new world of quantitative trading and coding development, and which may help you in your backtesting and trading optimization and all of that. So the code's here. As I mentioned, you have to code it yourself, but it's there. Just go type it and you'll get it. And it's validated, and it's going to hopefully give you the same results as what I provided you in my recent series. Again, as I mentioned, you'll need to be using the same brokers. And the main reason why I've selected these brokers is no other reason, but they've provided the largest amount of data through TradingView. So there's a mix of brokers. There's no one broker. The only reason why I'm mixing some up is because they provided the most amount of data. So when we are backtesting our trading strategies, we can go all the way up to 2004 for all currency pairs at least. So that's just what I found, and that's just what I use now. So saying that, I'm exhausted. I am gonna need a glass of water, but I am again super grateful for all the reception that I've been getting for these coding series. Again, if you've been following the No Nonsense Forex coding, well, what I've done in the past for this TradingView Pints Group series, it's been No Nonsense Forex related. So this one might be a bit of an overlap. Saying that, of course, as I mentioned in future videos, we're going to be doing other trading strategies that we do find on the internet, and we're going to be testing them, validating them, and seeing whether they work. And then in the subsequent episode, I will be showing you how to code those ones. So in the future, there's going to be a lot of new different things I think that we're going to be doing. So it's going to be a lot of fun. Anyway, again, super grateful that you're able to tune in and you're able to come and watch and stay for an hour and 7 minutes now. So have a great day. Hope this one is of value. Of course, if it was, hit that like button, consider subscribing if you haven't, and of course hit those bell notification buttons so that you're updated with the new videos that I do post out. And yeah, have a great rest of your day, night, afternoon, morning, or whatever. Happy trading. I wish you all the best of lucks and skills and the like in the world, and I will see you in the next video. Take care and bye for now.